This is our Forex blog for October 23rd, 2012. And like we do most days, we start the day, the first step of our three-step easy trading system, whether you're a brand new trader or experienced trader, you want to be in the currencies that are most likely to trend. You want to be in the currencies that if you have a winning trade, it's much more likely to give you 2 times or 3 times more than your risk. And so that way, even if you're less than 50% accurate, if your wins are 2 times or 3 times more, you can still make money on days that you're a little off. This is our new build your own trend currency meter. We have updated it from the last version, which showed multiple time frames on there. This one averages them all into one easy to read indicator. And as you can see on the bottom, we have the daily, weekly, monthly weighting statistical trends. We measure the dollar against every other pair and every other pair versus each other on multiple different time frames and using different methods. Some of them measure the percentage of the pairs going up or down versus each other, and some of them measure the intensity of that up or down movement. It's all averaged together in a very easy to read indicator that's also very fast. This is what the older one looked like, where you have the real-time trend on the top, 15-minute, hourly, daily, weekly, monthly underneath it. A lot of traders were confused by this because sometimes, like you can see the yen today, real-time trends up, 15, hourly trends up, the daily trend shifts up, but the weekly, monthly trend are still down. Whereas with the dollar, all the time frames are up. Obviously, this is a no-brainer. So for new traders, you're better off using the new one, which clearly shows you that the dollar on all time frames is stronger for the most part today than the yen. So trade the dollar against some of the weaker ones, like the CAD from 2 to 8, the Australian from 330 to 12. So let's take a look at the Australian dollar. We want to sell the weak Australian versus a strong dollar. So as you take a look at the Australian dollar, starting the day off, you see some sell signals. You take them. The circles are counter trend trades, and a lot of times the entry is a little bit early. If you get into a trade, let's say this one right here, when it goes 1 pip below the low, you could stop out with a loss. Typically, some of these are a little bit early. You get short again right here where you stop above the high. That trade worked. You have a little counter trend trade right here. And then there's 2 buy signals right here, which you can see pretty much stop the flow. And then sell signal here and here worked. Counter trend buy signals get you out of those trades. Trend trade here that worked. This, again, a little bit early. Small loss here. Win. Notice counter trend trade gets you out of that with almost every pip. This one's a little early. But the point is, the wins more than make up for the losses. So you got in really early into the day, got this nice big move here, a little bit early, small loss, get back in, nice big 20, 30 pip win, a bunch of 5 and 15 pip wins, 15 pip win here, loss, 5 pip, 6, 7, 8 pip loss, 10, 15 pip win, and so forth. So using our FX trade signals in the direction that the currency meter tells you to trade is one of the better ways of doing it. Now the strong dollar, we have a very weak CAD here, and you can see even before that there was a little bit of strength, and then the strength fell off when the weakness came back in at 2. You can certainly look to buy the dollar versus the CAD as well. Let's bring. I have this running on 3 pips per bar because the dollar CAD lately hasn't moved that many pips per day, somewhere between 55 and 60 pips. And so my FX trade signals only go back, I think, 300 bars. But basically, you can see from 2 o'clock onward, this just keeps trending up. If you don't get the signals on your chart because the bars go back too far, you can kind of buy pullback trades or little flag pattern trades. But you can see, 2 o'clock onward, this just kept going up. And basically, that's the whole purpose of our currency meter. Now, the euro wasn't really that weak other than from 2 to 3, but you can use our FX trade signals to trade any currency. You can just pick a currency if you want to trade a euro dollar, euro yen, pound dollar, and pound yen. You can do that as well and skip this step if you want to. Our FX trade signals are getting so good that you really don't need to use the first step of our method anymore. Here's the euro dollar, which you can see there are some narrow range entries right here, sell signals. Yellow signals are narrow range breakouts in the direction of the trend. You can see that trade here. This is a counter trend trade. Anytime you get a light gray circle or triangle, it's a low probability trade. That's one of the new features. You can put those to black if you don't even want to see them. But I like them because it's a good possibility of the trend possibly reversing. So if you're in a trade and you see that, you might want to move your stop down. But you can see this trade here worked, this trade here worked, counter trend signal right here, which you can see that one worked, even though it was a light gray. Get back into the trend on the pullback. That trade worked, which led to a 10, 20, 30, 40 pip move. Counter trend signals, the bigger the dot or triangle, the higher the probability is. I've recoded every single one of our approximately 35 plus trading signals to show different sizes or the appropriate odds based on that signal. Some of our trading signals are low probability in certain circumstances and higher probability in others. For instance, if a currency is underneath its daily statistical low or one standard deviation daily low, anytime a counter trend trade comes up, it's much more likely to be the end of the move, and so therefore we color these dots bigger so you can see to get the hell out of the trade if you're still short. And you cut almost every pip in this trade right here. Look, got you out. Chart right here, got you out. And if you're an aggressive trader, look at the real-time momentum. If you see some counter trend buy signals and it's weak, don't take them. You see this one right here, and it's been going sideways. It's below the band. There's one bar of weakness on this reversal pattern right here. It's not that weak. You might have taken it. And this one's a no-brainer because it made another lower low, just barely, with almost no weakness. Get into this trade and ride it up 20 pips for a counter trend. Now, for all those traders that trade a U.S. session, you're going to love the accuracy of our counter trend signals. I only show the highest probability counter trend signals, and there are patterns that I like that are lower probability in certain circumstances, like the middle of the range here, and so therefore I give them very light gray, which is the default color. You can change it to whatever you want. If you don't want to see those, just make them black or whatever your background color is, and you won't see them. It's easy as that. So let's take a look at some of the other currencies. This is just allowing you to trade any random currency you want without even having to use a currency meter. Our signals are improving each and every day. I go through all the patterns each and every day and put in additional rules to get rid of trades I would not take. And as you can see, I've recently changed the sizes of the circles and dots to show higher and lower probability trades, depending on a slew of different statistical models that I use to trade. Now, these are all ways that I've learned to trade over the years because I've created the software for my own trading, and I know which trades are higher probability and which ones are lower, when a counter trend trade is relatively safe and when it's not. And so you can see the gray ones. This one worked and gave a nice bounce. This is a very high probability counter trend signal, so I left it red. The red counter trend or green counter trend circles are much higher probability than the gray. And if you see some counter trend signals coming up and the strength falls off, you might want to take a short. So let's look at some of the other ones, like the euro yen, pound dollar, and pound yen. Here's the pound dollar, and you can clearly see on the bottom that the daily, weekly, monthly trend is down. The price is underneath the hourly moving average for the most part, so you want to focus on taking sells. This is a good trade right here. This was not enough of a pullback for me to put a sell signal on, but nonetheless, if you see a move up without that much strength, these signals, believe it or not, do not even use the build your own trend tools. It's my plan to put that in there at some point, only for live signals, not for past signals. It's impossible to do that. But if you see a move down with a lot of weakness, a move up with very little strength, very high probability. But you can see this trade here worked, this trade worked, this trade worked, this one here, small loss, this one here, break even. Obviously, sorry about that, my antivirus popped up some things. And again, look at how good the counter trend signals are. Boom, nailed the low, nailed the low. This one here failed, this one kind of won. And I have not even put in code yet. This one here also caused the bounce. I have not even put in code yet to look at my Fibonacci retracements, Fibonacci profit targets. Anything at or below my Fib targets, very likely to be high probability reversal. So, anytime you get a signal underneath there or right at them, very high probability, especially the second Fib target right here. Nice bounce. You would have a small loss and then a nice 20, 30 pip win. Here's the euro yen. Now this one, keep in mind that the weekly monthly trend is pretty strong, but the real-time trend today was weak. As long as it's not below the white 2.0 band, you're pretty safe, trading against the longer-term trend. When it gets below the white 2.0 band, I'd really avoid taking this trade here, in here, and here, because, the longer-term trend's up. But you can see this is a new signal I put in today. Basically, the previous 4-hour period, the low went underneath the statistical range low, which means it made a big down move. Waits for a pullback, gets short. This trade here worked, this trade here worked. Counter trend trade right here failed. This here lost. This one here had a big win. Counter trend signal, remember, light gray means it's a relatively low probability because it's not down statistically too much. These bigger green circles are much higher probability, and you can see it pretty much stopped price for a couple hours and then led to a 30 or 40 pip reversal, these signals right here. And anytime you get a bunch of counter trend signals, you might be very careful taking a trend trade, from that. If you click on the chart, you can see what the pattern is. This one's number 11, trend sell. If you find certain ones that have lower probability, you can click on it when you see it happen in real time and, possibly not take one if you don't believe in it or it's a higher risk trade like this. Okay, you can see this one, for the most part, it's underneath the hourly moving average, so you're mainly looking for sells. Keep in mind the longer term trend is up, so I'd be very careful when you have a pullback day like this to not take the ones near the lows, but the ones in the middle of the range are pretty safe. This one led to about a 20 pip win. If you took this trade right here after this pullback, you would have had a loss, small win. This trade here would have been about a break even. Some low odds counter trend trades. If you took them and held on, you could have made 10 pips. This trade here led to a 20 pip win. Counter trend, big counter trend circle right here, right near the weekly point of control in the 3.0 band. These 3.0 bands typically price almost always reverses off of them, so it's a very good way for US traders to make 20 or 30 pips on the bounce from these levels. Again, you see a lot of times I'll scale into a trade here. I'll go in light, and as it goes down, if there's any other support here, let's say I got into a trade right here, I'd scale in because there's a major support right here and then hold on for the move up. And if it moves up without that much strength, I'm just going to take usually about 10, 15 pips on a counter trend trade. If it explodes up with a lot of momentum like this, bars over the 80, I'll hold on sometimes for 30 or 40 pips off the lows with big positions because I scale into them. So that's it. Use these signals to help your trading and improve your odds even more by using the currency meter, especially the new one, which makes it really simple. There's one level of strength or weakness for each that weights all the different time frames and all of our different tools into one easy to read reading.